What's up, guys? Today I want to talk about how you can help someone stop foreclosure on a house. Okay, the only difference between you helping them do this is what you know. So today I want to share with you 5 different ways I know of how I can help sellers stop foreclosure on a house. Literally, and I have the best intention of helping them stop foreclosure. Okay, now one of these ways definitely benefits me, but the goal is for me to educate as many people going through this problem pre-foreclosure and help educating them so they can stop foreclosure and have the option to regain or keep their house or save their house, right? But if they choose to use me, then great, I benefit as well, and I want to share that with you on this video today, guys. What's up, guys? It's your boy Sawan Belcher. This is me taking action on Instagram, and here on the This Is Me Taking Action YouTube channel, we talk about business, finance, and how to make as much money as possible during a 30-day period of time using real estate investing. Okay, the best part about what we teach here is it doesn't require money, credit, okay, or a particular race or anything. Literally everybody can do this. Anyone can do this. Doesn't matter what you have or what you don't have. All it takes is a little hustle. Let's get right into this. I want to share with you this education, this little simple education that I learned. It really didn't make a huge impact on my life until I actually started sharing it with sellers. I was generating, motivated seller leads at the time, but I really wasn't sharing this advice with people going through this problem. But when I started making it a part of my rapport building, make it a part of my offer and my solution driven offer, that's when I started to see opportunities open up for me where I didn't need to qualify for a loan. Literally all of the loans I was approved for already, okay? Just by simply knowing these little steps of how to stop a foreclosure. After you're 1 month late, you'll typically get a late notice, not a notice of default. The second month, you'll get a notice of being late. The third month is where banks connect with the local courthouse and let them know that they are about to send you a notice of default so they can start the foreclosure process in order to take the property back, or not even take the property back, but in order to resell the property so they can recoup their money and essentially take the property away from you. So we want to step in front of people right after they've made their first late payment. I mean, really, in between their first late payment and the auction, we need to insert that education. So in order to insert that education to those particular people, we have to know how to find those people, okay? Once you found those people, we need to educate them that you can delay foreclosure, okay? You can stop foreclosure by these 5 things: forbearance, loan modifications, a short sale, deed in lieu, or pay back the payments that you owe, okay? And in this video, I'm actually going to go through just in small, minute detail of what these different things are and how the owner borrower can benefit from these things. Now, the first one is forbearance. Forbearance has been super common over the last 3 years because the government made it super common. But forbearance essentially means that the bank will agree for up to 9 months, okay, for up to 9 months that you do not have a payment due right now. No, essentially they will look at some kind of hardship and you providing documents or evidence that, hey, you're going through this hardship, but in the future you will be able to afford to catch up your payments. They will grant you forbearance. Now, essentially during this period, during this 9 months, what they say is you don't have to make a payment. And also during this period, you don't have to pay any interest. But if you do happen to make a payment, it will go towards your normal payments and everything will be just fine. Okay. Now, the downfall to forbearance is at the end of the 9 months, at the end of whatever term they agree to, all of your payments come due plus the next month at the exact same time. And if you don't make that payment at that time, I mean, months 1 through 9, on month 10 plus number 10, if you don't make all of that, let's call it $10,000, you know, your mortgage is $1,000 a month, assuming your mortgage is $1,000 a month, on the 10th payment, you have to make a payment of $10,000. If you don't, then they're going to start the pre-foreclosure process. Now, it may seem like that doesn't really help people, but 9 months of no payments can really help someone come up with a strategy or a way to pay their lender back, okay? And giving that to someone, I'm telling you, will literally change their perspective on it, okay? Now a lot of these things people might not see as a benefit, but because you're educating the seller that's going through this on these 5 options, it will almost seem like you have their best benefit. It will seem like, sound like, and look like that you have their best benefits first before your own. The second way is a loan modification. So right now the loan has a certain interest rate, has a certain payment, it has certain terms inside of the loan that the bank has agreed to for X amount of time. Now, for whatever reason, you can't abide by those terms, so you can let the bank know, hey, this is a hardship. I can pay, this is what I can pay, how can we make a change? Or I just lost my job, I just got hired on a new job, but since I'm a teacher, it's summertime, it doesn't start for 2 months. How can we change up the terms of my loan so that way you don't have to go through the expense of spending money on foreclosure, right? Spending money on attorneys, spending money on the court costs, spending money on the auction fees. How do we get through these couple months, you know, and still you get what you need? Now, the downfall, like I said, is your loans are going to turn, your loan terms are going to change. So if you got that great, you know, 2.5 interest rate, you know, during the pandemic when we had those, you know, when we had the greatest interest rates ever, then your interest rate probably not going to be so great no more. Now, if your payment was so low because you had great credit at the time, your payment might not be that low anymore. So there is a downfall, but the banks are willing to modify your loan for a good hardship and a good strategy to pay them back later, okay? Now, you will have to prove hardship in all of these cases, but one, you won't have to prove hardship with one of them. But a bank is open to this because I'm telling you, foreclosure is expensive for these banks. And at the end of the day, the banks don't want the property, they want the interest, okay? They're not interested in your house. They don't want to move in. Short sale, okay? So a short sale simply means that whatever you owe, it's not going to be paid off, but the banks are willing to settle that amount for a lesser amount because you can pay immediately, okay? Or you can pay on a promised date, I should say. Now, during the short sale period, sometimes, you know, the bank will say, hey, you don't have to make a payment during this time. It will be accrued interest. So your payoff will be going up and up and up during this time. Okay. And for a short sale I think the qualifications for most banks is typically a hardship, of course, and proving that, showing that your house is not worth what you owe. So through like an appraisal or comps or CMA from your realtor. And then showing that that you actually have a buyer lined up, or you have some kind of exit lined up to pay them. This is a good strategy for you if you have those things. So if you can prove hardship, if you have an appraisal that shows that what you owe is more than what the house appraised for, or if you have a CMA from a realtor showing that what you owe is more than what the CMA is for. And also if you have a buyer that's already ready to go, willing to show proof of income, and he's ready to close, you know, a short sale might be good for you. Now, this is not a quick process. This is not a quick process because there's a lot of underwriting and a lot of people that have to check off and sign off on this. But this is a good solution to stop or delay foreclosure. Okay. Now, the next one is a deed in lieu. A deed in lieu. Now, inside of home ownership, there's most of the time there's an owner and then there's a deed of trust. There's an owner and there's a mortgage. There's two different people. It's two different pieces of paper. So typically the person that's on the deed of trust, the mortgage, they got that paper to protect themselves. I mean, they're cool with lending you the money, but that piece of paper protects them. So if you ever sold the property, you know, that they would have a way to recoup their money if they needed to. If you wasn't willing to pay, they could recoup that money because that piece of paper is recorded at a federal or state level. Since they've done that, they know that you're using the house as collateral. So you can just simply say, hey, Mr. Bank, I don't want to go through this. I'm stressed out. I'm having panic attacks, I'm having hardships. I can't find no jobs, whatever. My lights just got turned off. My water just got turned off. I'm just going to deed the property back to you. I'm going to move out and I'm just going to deed the property back to you in lieu of you taking this off of my credit, in lieu of you not asking me for money ever again. Deed in lieu of whatever you need. So, okay, so this is a way to stop foreclosure or delay it. Because once again, during that time of them making their decision, a lot of the time they're open to you not making payments for 30 to 60 days in order to come up with this plan, once again, so you can stop or delay foreclosure. Now, this last one is me personally, my favorite. It's my favorite because the seller doesn't have to prove hardship. And proving hardship means that you submit taxes, that you get letters from your job, and you get embarrassed and have your manager write letters that say that you don't make a lot of money, you can't afford it, that they've been seeing you sick coming into your job. You start showing people your bank statements and they're all into your personal information, and it's just, I don't like that. It's just too much. And a lot of other people don't like actually having to prove hardship as well. And so with this last one, you actually, you really don't lose. Your credit gets better over time. So on these other ones, a short sale that reports on your credit as a foreclosure. Even though it is a short sale, it still gets reported on your credit as a short sale. As a loan modification, that still reports to your credit negatively, okay? With this one, you have the opportunity of having the owner borrower has an opportunity of having clean, squeaky credit, okay? Even if there was late payments before, those can get removed with this particular option. And this option can be quick. Literally, it can take about 3 days, okay? Most of the time people do 14 days and that's just how life goes. People move slower than they want, but it can be done extremely quickly. It's so quick, it's almost instant. And it's really the best way, in my opinion, to get debt off of a borrower's shoulders, okay, and relief into your hands. Now, this is catching up the arrears. Arrears, banks typically call arrears back payments. Catching up the arrears and continuing the existing payments as is on their loan. Now, of course, catching up their payments is going to help them keep their house. Of course, making the payments after they catch up their payments is going to keep the house. But how are they going to do it? So one way people can do this is every local city and county gets money from the federal government as grants or as interest-free loans, and they call it assistance programs. You can go down to the county and say, hey, this is my problem. Are there any assistance programs? And so one lady I bought a house from, she got a $10,000 assistance programs. They paid her mortgage for a year. And the only thing she had to do was live there for another 5 years, and she never had to pay the property back. She never had to pay the loan back, and it didn't come with any interest. That's a win, okay? That's a win. If you don't get approved for it down at the city, next you can find a investor, a real estate investor like myself, who is willing to come and pay the arrears and pay the borrower and seller cash in order to exit the house, and then that investor continues to pay the payments. Literally, doing it either way, using the city or an investor, the homeowner will get the chance to increase their credit, okay, by catching up the payments. Okay, a lot of times banks will remove the late payments when they do that. You just have to ask them to, do that before you make the payment. And then over time, their credit will increase over time because that investor will continue to make their payments. Okay, I call this home loans for everyone. Okay, home loans for everyone, investment loans for everyone. And I have a training that we're doing on October the 1st to help you learn how to help sellers stop and delay foreclosure by taking over their mortgage payment so you can own a house not using any of your own credit, W-2 income, taxes, and all. Literally, so you can buy houses using other people's mortgages. And I'm gonna leave the link below. I don't want you to miss out on this opportunity. Yes, we will do this live training again, but it will be more expensive, okay? And ultimately, just like the last private money the private money course, we will do it 3 different times, the price going up each time, and consecutively at the end of it, we will make a pre-recorded course for everybody who wants to get it. That will be even more expensive, but it won't be a live interaction. So I'm going to ask you to look out for your future self. Click the link below, and we'll see you on the call. Peace, y'all.